So we are starting with session 2 of chapter 3rd debenture. In the previous chapter we have already seen about how debentures are being issued and how trust is created. So now we will see debenture trust deed in detail. So because debenture is a debt of the company. So suppose imagine in any normal case, if the company is going to take a loan from a bank or a non-banking financial institute like Bajaj Finance or such institutes, then what the bank will do is the bank will ensure that some assets are mortgaged in the name of the bank. That is, if I am giving a loan of 2 crore rupees, then the bank will say that okay, I'll give you 2 crore rupees, but against this I want assets of 3 crores rupees which are to be mortgaged in my name. So in case the company defaults in payment of this 2 crore rupees, then I can sell these assets and recover my money. So bank will take care of all such things. Further, bank also have experts who will continuously keep a watch about how the company is working, whether company is making profit or loss, will the company be able to repay its amount or not. The bank will continuously monitor these things. Now imagine debenture holders. There are 10,000, 20,000 debenture holders. These debenture holders are general public, people like you and me. They do not have the time, they do not have the expertise to continuously monitor about how the company is doing, whether the company is making profit or loss. Or they don't have the expertise to decide that okay, after 15 years will I get my money back considering the current situation. So what these people will do to control this 10,000, 20,000 person, to control the interest of these people, they will create a trust. And whenever you are creating a trust, you have to create a trust deed or a trust agreement. So through this trust deed or a trust agreement, the trustees for this trust will be appointed. These trustees will be sort of representatives of this debenture holders. They will be the person responsible to take care that the interest of debenture holders are safe. So because debenture holders are scattered over different places, they are unorganized. So to safeguard the interest of these debenture holders, representatives who are also known as trustees are nominated. What this trustee will do, they will have a continuous interaction with the company. So we had seen in previous chapter about fixed charge and floating charge. That is, the company will mortgage some of its assets in favor of the debenture holders. So it can say that I am mortgaging 3 plant or 3 factories in the Shillong area. So these are specified assets. So this type of mortgage will be called as a fixed mortgage or a fixed charge. And if the company is not giving a specified asset, then it is called a floating charge. So the debenture trustees are responsible to see that these assets are safeguarded. That is, if these assets are damaged in any way, or or the company wants to sell off these assets because they are incurring loss, then they will first have to come to the trustees, take their permission. The trustees will see that okay, the company is actually incurring loss in this factory site, so we'll agree to the sale of this plant, but in exchange I will have to take a mortgage of some other plant or some other factory, so that my interest of the debenture holders is safeguarded. So they will do such transaction, they will have a continuous interaction with the company, and they will make sure that the amount of the debenture holders is fully secured. Now these trustees will call for a meeting, an annual meeting of all debenture holders. In this annual meeting, the trustees will submit all the workings which they have done during the year, all the meetings they have done among themselves, all the meetings they have done with the company, all the changes in the charges, all the changes in the assets which they have observed, and all the work which they have done. During this meeting, if the debenture holders want any changes in the trust agreement or trust deed, then these amendment can also be done in the meeting. Now, for one thing which is given in the first paragraph is that this agreement, there will be two kind of agreement. First, when you are purchasing the debenture. Now, at the time of purchase of debentures, when the purchaser is signing the debenture purchase form, So in the form itself, there will be many terms and conditions in the prospectus which is issued for the debentures. All these things will be mentioned about how that the company has created a trust agreement, the company has created a trust, and who will be the trustees of the first trustees appointed by the company. So these things will be mentioned in the prospectus, and also these terms and conditions will be given in the debenture purchase form. Now, after allotment of debentures, also you have to sign an agreement regarding mortgage of assets or creating a charge on the assets. For this, an agreement will be signed by the company, and on behalf of the debenture holders, the debenture trustee will sign this agreement, and then this agreement will be registered with the registrar of company. So, whatever agreements and documents have to be done with the debenture holders, all those things will be done by the trustees on behalf of the debenture holder. Now, what all are the particulars which is mentioned in the trust deed? So, first, the trust is formed for the debenture holders of a particular company. So, the particulars or the description of the company will be given. Then, the description of the debentures will be given. That is, this is non-convertible debentures. The lot number is XYZ123, and these are non-convertible. This will be redeemed out of 15 years. It carries a rate of interest of 8%. All these description of the debenture will be given. Next is the securities or the assets mortgage will be mentioned in detail in the trust deed. Next is who will be the first trustees which the company has appointed. Their names will be mentioned, and the appointment of the subsequent trustees. What will be the procedure for appointment of the next trustees, that will be mentioned. Next will be event of default. For example, if the company is supposed to pay an interest every quarter, that is once in 3 months. So, suppose the company is not paying the interest once in 3 months, then the trust deed may have a clause in which it is mentioned that the debenture holders will wait for another 5 months. If another 5 months the company is not paying the interest, then it will be considered a default. And if a default happens, then what are the steps which the debenture holders can take? So, in the case of default, usually the debenture holders can approach court also. They can request for the liquidation of the company also. They can request for sale of the assets of the company also. So, what will be the specific events in which the company will be considered to be in default? That will be mentioned in the trust deed. Next is what is the obligation of the company? That is whatever the rate of return they have promised, whatever repayment at the end of 15 years, 20 years, whatever premium they have promised. All this will be the obligation of the company. Other than that, they may have promised that we'll give you an annual report. So these all are the obligations which will be mentioned in the trust deed. After that, there will also be mention about in case the debenture holder want to change any clause in the agreement, then what is the procedure for making amendments, making changes, that will be mentioned. What if the debenture trustees are want to meet, then how will they give notice? If they want to conduct the annual meeting, then how will they give notice to the debenture holders? If the debenture holders have any objection or any suggestion or any grievance, then how will they communicate to the trustees? All these procedures will be given in the trust agreement. Now next is procedure for transfer of debentures. So just like share transfer, debentures can also be transferred, and we had seen that debentures are also listed in the stock exchange. So the procedure of debenture transfer and share transfer are quite similar. Debenture holder will purchase a debenture transfer form. In the debenture transfer form, he will fill all the details. He will fill the name and address of the seller. He will fill the name and address of the purchaser. He will fill the details of the debenture. That is, what is the number of debentures which he wants to sell, what is the serial number of these debentures, at what price he is selling. All these details will be mentioned in the form. Now in the form, both the seller and the purchaser will sign. Below this, there will be a sort of undertaking. In this undertaking, it is written that I, the debenture holder, am selling these debentures voluntarily. That is, there is no pressure on me. I know that I want to sell this amount, I want this money. So it is voluntarily act. No one is forcing me to sell these debentures. It is sort of an undertaking. It will be just below this transfer form. So this undertaking will be signed, and then this debenture transfer form along with the original debenture certificate will be sent to the registered office of the company. In the registered office of the company secretary will verify this debenture transfer form. He will verify the sign of the seller. He will verify whether the debenture certificate is original, authenticated or not. He will verify that the stamp duty which is paid on this transaction, it is adequate, or the stamp duty is less or not. And if the stamp duty is proper, all the sign, debenture certificate, everything is proper, then he will make an entry in the debenture transfer registered. After this, whenever the board of directors will meet, in the board of directors meeting, the company secretary will put up an agenda. In that, he will mention that these are the debenture holders who want to transfer their debentures to another party. These are the number of debentures and the serial number of the debentures which have to be transferred. The board of directors will approve this transfer by passing a resolution. Once this transfer is approved, then the company secretary will make the changes in the debenture holders register. That is, the name of the seller will be removed from the register and the name of the purchaser will be added. After this, the changes will be made in the debenture certificate, and now this debenture certificate will be sent to the purchaser. Next is difference between share and debenture. So what is the meaning is, share is the owner's capital which is divided into small part, and debenture is the borrowed capital which is divided into small parts. Next is, what is the nature of the capital? Share is the owner's capital, that is by purchasing the shares you are becoming the owner, and debenture is the borrowed capital, that is company is borrowing this money and it will have to repay this money. Next is return. When you are purchasing, whenever you are making any transaction, whenever you are giving money to the company in any form, you won't give the money for free. You are expecting something in return. So this is what is called return. When you are purchasing a share, you are expecting that you will get a part of the profit. What is part of the profit? Part of the profit is dividend. So whatever profit the company is doing, the company will distribute in the form of dividend, and it will be received to the shareholders. When you are the debenture holders, you are expecting return in the form of interest. Now, rate of return. So if the company is doing profit, then it will give a higher rate of dividend. If it is doing a less profit, then it will be giving a lesser rate of dividend. If it is incurring loss, then it will give no dividend. So the rate at which you will get your return, the rate of dividend, is not specified, it is not fixed. But for debentures, a debenture holder, it is mentioned in the debenture certificate of what the rate of interest will be. It is mentioned in the certificate that it will be 8%, 9%, whatever. So here the rate of return is fixed. Next is ownership. So shareholders are the owners and debenture holders are the creditors. Risk for shares is more because first the rate of return is not fixed. You can get 0% dividend, you can get 20% dividend. Further, at the time of liquidation also, you will get your capital in the very end. So it is possible that you may not, whatever amount you have invested in the shares, you may or may not receive it back. So there is a higher risk in share. But in debentures, what is happening is the rate of return is fixed. The company will give the interest to you first on priority. Also, whenever they repaying the amount at the time of a liquidation, at that time also the debenture holders and the creditors will get priority. First their dues will be paid, only after that the shareholders will be paid. So comparatively the debentures are less riskier. Next is right to vote, because the shareholders are the owners, so they have voting right also. Debenture holders are the creditors, they are not the owners, so they do not have any voting right. Stamp duty is the charges which is to be paid on a transaction. So this charges is decided by the government. But what government has decided is that whenever you are doing any transaction of share, whether it is share purchase, share transfer, so the stamp duty on these transactions will be lesser, and on the transactions of debenture purchase or debenture transfer, the charges will be higher, so the stamp duty will be higher. In case of redemption, the shares will not be redeemed or the amount of the shares will not be, the shareholder will not receive the amount of the shares till the company is living, till the company is not liquidated. The shareholder will not get the amount. Yes, you have to understand this, that when the shareholder transfers a share to another person, he will receive the amount. But this is, here we are talking about the company giving back the amount to the shareholder. Company will never give back the amount of the shareholder. One person may transfer to another person, so you may receive the amount from another person, but the company will not give you any money. So redemption during the lifetime of the company is not possible. But in case of debentures, it is given in the debenture certificate itself that the debenture will be redeemed after 15 years or 20 years. So after this 15 or 20 years, the debenture will be redeemed. Now charge on asset, because they are the owners, so all assets are their own, so there will be no charge on asset. And in case of debenture holder, charge will be created on the asset, and in case of liquidation of the company, these assets will be sold off and debentures will be repaid. Now payment out of capital. So suppose a company has paid up capital of say 10 crore rupees. It is lying in their account, but they do not have any profit. They are incurring loss, but at the same time they have paid up capital. They have kept it for some separate purpose. So the company cannot say that, okay, I have paid up capital of 10 crore. So out of 10 crore, I will use 1 crore to pay dividend to my shareholders. Why? Because this paid up capital have been given by the shareholder itself. So to take money from this paid up capital and return it back in the form of dividend, it is not logical and it is not allowed also, because you are taking shareholders' money and just giving a part of it back to the shareholder. But in case of debentures, if you are incurring a lot of loss and you are not able to pay the interest to debentures, you can use this 10 crore paid up capital to pay the interest to the debentures. Next is control. Now because shareholders are the owners, so they have the control over the management and administration of the company. How are they exercising this control? By use of their voting rights. And in case of debenture holders, their control only is limited up to the charged asset. So for example, we have seen in fixed charge that some assets will be specified that these 3 factory sites are in Shillong, and these against these factory sites I am creating a charge for repayment of debenture. So if company wants to take any decision regarding these 3 factory sites, then they will ask the debenture trustees. But other than these assets, if they want to take any another decision about any another site, then debenture holders will not be asked. So debenture holders do not have any control over the management or administration of the company. Their control is only limited up to their own interest or the own charged assets. Okay. And finally, we have demand for liquidation. Shareholders cannot demand for the liquidation of the company. Debenture holders can demand for the liquidation of the company. So basically, if the company is incurring any loss, even if the company is incurring any loss, the shareholders have the liability to pay the face value of the amount. That is, if the face value is 10 rupees or 100 rupees, the shareholder have to contribute the amount till 10 rupees or 100 rupees. And the company does not have any obligation towards the shareholder. It is not compulsory for the company to pay dividend every year. So the shareholders have an obligation towards the company, but company does not have any obligation towards the shareholder with regards to payment of dividend, etc. So because there is no obligation on the part of the company, so shareholders cannot go to the court and demand for a liquidation or closure of the company. But for debenture holders, in case of debenture holders, the company have the obligation to pay the interest. Company have the obligation to repay the entire amount of principal amount. So if the company is not able to fulfill its obligation, if the company is defaulting in any way, then the debenture holders can demand a liquidation. Debenture holders can go to the court and ask the court that because this company is in default, is not able to pay our interest, is not able to repay our amount, so we are requesting for closure of this company. Kindly close this company, sell off all its assets and repay our amount. and the court can decide for liquidation. So debenture holders can demand liquidation, shareholders cannot demand liquidation. With this we complete our chapter, and thank you.